Okay, looks like we've reached critical mass. The slow trickle of attendees now. Again, thank you for being here. This is George LaRock with HR Wins. Um, we are going to talk about, as we do quarterly here, the Q1 2020 global HR tech investments. So what we found in tracking the investments globally. This is one of uh, several pieces of content that go out to members and subscribers with early access, and some of the pieces of content like this one we open up broadly. VC reviews like this happen quarterly. Starting next week, we've got a new, given what's happening in the world these days, a new weekly series for tech providers based on going to market in this, what will become a new normal. We're not quite there yet. We'll be looking at market segments, vertical markets, strategy, etc., on a weekly basis. Quick conversations about what we're seeing and hearing through advisory. Any member that is a tech provider has access to that. And we'll talk about that in a few minutes. We will also be announcing shortly a new weekly session for employers in a similar context, but there'll be an announcement that goes out about that. Who are you hearing from? I'm the founder and principal analyst at HR Wins. I've been in the industry for 30 years. I've had, I think, each relevant seat that qualifies me to track this data and then share some insights with you, having been a practitioner in both the staffing and the HR seat. I've been a HR tech executive and launched some of the industry's bigger brands. For the last 10 years, I decided to start translating between the customer and buyer and HR community and the tech provider community, and vice versa. I'm also one of the founding members of the HR Federation, a group of analyst firms. We come together and have launched HR Tech Book, a directory of global HR tech providers. And then I recently launched Future of Work magazine, which is a news aggregator focused on future of work. So that's at futureofworkmag.com. So if you're here today, you may have come in the last 24 hours when this opened up in general. But just to let everyone know, if you're looking for access to that, the content, the webinars that we talked about, the Market Insider membership is free. It's basically a subscription to that content. Data access is a paid subscription. It gives you access to, at this point, 13 quarters of tracked global HR tech VC data, and then Insights and Advisory is a advisory membership, and you'll find more info on all of that at hrwins.com. So let's dig into the data. I want to say first that I always provide this, disclaimer. I'm not here to give investors financial advice. I'm not telling you, which startups to put your money into or what categories to invest them in. My aim here is, in tracking the global VC data, is to look at where the dollars are going, what technology is emerging, and how that ties to the trends that I'm seeing in the research that we do around work tech, and the future of work. Having followed this for years through my whole career, it was about 3 years ago I noticed that the public sources that were available only got me about halfway there in comparison to what I was tracking on my own. So I started doing that more diligently, and then started reporting on it about 3 years ago. So we go to it's over 60 public sources or different sources of news and data that come into us. That goes through an automated process and then gets vetted. Some of those I write about on a deal-by-deal basis at hrwins.com, share it in the Talent Product Plays Facebook group. Some of it just gets reported through hrwins.com, and then we look at it quarterly here. So that's how we get here. You've been looking at the numbers now for a moment. 867 million in Q1, over 56 deals. If we look at the last 13 quarters, that's a little better than average, the average having been 841 million. But as you'll note, things really picked up in 2018. And if we look at the last 7 quarters, it's the lowest quarter, but it's one quarter does not a trend make. If you look at what happened in Q3 of 2019, we bounced back. Obviously, there's something happening in the world right now that started in Q1, being the coronavirus and COVID-19 pandemic. But while that started impacting, it started in January, it really didn't have a material impact from a economic perspective until we were into March, in the US, I should say. And so that's when things really started happening with the travel bans here and so forth. So most of the deals that we see announced and reported and that we report on an ongoing basis have been in process for quite some time. To give you an example, I'm aware of deals that were closed in Q1 that have not been formally announced and are not showing up in this report yet because of it. So sometimes it's the deal themselves that takes time. Sometimes the deals are done and they're not publicly accessible. Every deal that we report on is citable. There's a citable source to the data. So we don't take these deals based on hearsay. So that was sort of at a high level, the numbers, and then you can see the last 13 quarters of data. When we look at how it looked globally, it wasn't much different than what we've seen over the last 3 years or what we see quarter to quarter. The U.S. is always leading the market as far as the number of investments with this quarter, or Q1 with 24. The UK was second in line with 8 deals. Germany and India both had 3 deals. And then Brazil, Canada, France, and Israel we saw 2 deals reported there from each of those countries. And then most of the other countries on the list had 1 deal. And it usually breaks out in that way. We have seen France has had, for a couple of years, a very consistent contribution along with the UK, but France sort of emerged with some programs economically that brought on a lot of startups, a lot of technology innovation, and HCM and HR Tech has certainly seen that. We've also noticed that Asia Pac has become more consistent, has, not in a single quarter basis, but when we look back over the last year or 2, there's been more consistency there. South America has been a market where we've seen emerging some very large deals in both the job board categories, talent acquisition, as well as benefits and core payroll. So, emerging markets as well as new technology markets where we've seen more consistent deal flow, still fairly small numbers in comparison to the US, but it's interesting, and we've got our eye on that as well. So let's dig into Q1's data a little more. When we look at this, the deals that we track, again, this picture looks a little different, but it's impossible to look at the timing of everything and say that it's because of any particular issue as of yet, meaning, the pandemic. But when we look at the deals, the total dollar volume in HCM in comparison to talent acquisition, HCM and talent acquisition are usually much closer. It's usually those are the two larger categories, usually within throwing distance of each other. This quarter, this jumped out at me that there was a talent acquisition always has a smaller average deal size. It's normally not this drastic, where the average deal size that we tracked was under 10 million for talent acquisition and close to 30 million for HCM. Talent management is normally, has a smaller average deal size than talent acquisition. So this jumped out, the fact that recruiting technologies started to see a slower pace of deal volume, as well as deal size and average deal size. Now, again, it's one quarter. As we've looked into Q2, we have had a couple of talent acquisition deals. Again, not as large as we've normally seen, but as we've rolled into April here, the pace has it's not unusual in what we've seen from Q1 to Q2, going back the last 3 years, but we're sort of braced for impact, and we'll get into what some of the investors and startups are telling us in a couple of minutes. When we take a closer look at below the top level categories, where we really get granular with the subcategories. These are the top 10. There were 19 different subcategories that received investment, below that HCM, talent acquisition, and talent management. This list is very familiar. The only change when we look at what changed from Q4 to Q1 is that chatbots and messaging jumped onto the list, and analytics just fell slightly lower on the list. But we did have analytics deals, just not as many as we did in Q4. Again, the job boards, which normally have a much larger command of the investment, is still in the top 3, and it's still a very more than respectable showing. And it's not always number 1 on a quarter-to-quarter basis, but number 1, number 2, and usually pushing neck and neck with one of the core HR categories. In this case, benefits and wellness received more investment from an HCM perspective than the job board market. And we really didn't see any other talent acquisition outside of the ATS and TA suite. When it comes to that particular subcategory, it's consistently it consistently receives investment quarter in, quarter out. There's a lot of emotional vitriol for the applicant tracking systems and platforms. But the reality is that folks are innovating there. They are receiving investment there. We have seen new players emerge in the last 5 years, 10 years. And I think we'll continue to see that as technology continues to innovate into new platforms, new paradigms as far as usability and access. So I just want to reinforce that one quarter does not a trend make, and I think the story about the impact that the pandemic has or had on this year's VC investment, we'll be able to look back and tell that story in Q3 and Q4 versus today, or even today in Q2. So let's keep digging in. And this is just to show you what the subcategory view looked like in all of 2019. So you can see job boards, as usual, sort of led the way, and job boards. Some of you may not have been following this data that we put out on a quarterly basis, or this might be your first webinar. But job boards, and I've got the view for the last 3 years. It's a staggering lead in a staggering misconception that, job boards aren't active. And in fact, they're finding new models and new ways to engage talent and provide added value to both employers as well as candidates, and turning into true marketplaces. So when you think about new trends like the gig economy and other contingent work, contractual workforce, while we're dealing with, issues today that are certainly impacting those startups and those businesses that are focused in those markets. When we look long term, there are also still big opportunities for those, and so I expect we'll continue to see marketplaces that offer employers the ability to engage talent with new models, and in whatever this new normal evolves to be. We'll see future interest as well. When we look at the deals globally, it breaks down in a similar fashion as well. So there's no geographic difference when we look at things globally. So if I look at here the last 3 years, and this shows you the this is fairly consistent with what we see on an ongoing basis, quarter to quarter. You can see the various subcategories and how they're trending. I want to go back to the 2020 subcategory list and just mention a few of the bigger deals that came in across the categories. And the quarterly report that's on HR Wins goes into more detail around this as well, the infographic that gets published quarterly. The biggest deal this quarter was Headspace at 93 million. You know them as a meditation app, but this latest round, they're taking into a wellness play, for employers coming into the space. We saw some large deals in the benefit space with Headspace was 93 million, Lyra in the benefit space 75 million, Maven at 45 million. In the HR space, Personio at 75 million. We saw payroll, JustWorks raised 50 million this quarter. In talent acquisition, there were 2 job boards that led that category, Catalent and InterviewBit. In talent management, in those deals, Catalent was 35 million, InterviewBit 20 million. In talent management, Udemy at 50 million, Workboard at 30 million, and there was another $30 million deal in performance management, Servier. And so those, I think in talent management, and particularly in areas where you see models really changing, learning is a good example of that. When you think about benefits and how things are changing from access to data, the way that data can help an employer make better decisions financially and otherwise for benefits packages that they're providing, as well as how they're financially, how they can save money, looking at the ROI around benefits, and then also how technology can impact the benefits decisions that employees are making, especially in an area like the US where there's so much attention on this, given our healthcare model. There's a lot of investment there, a lot of innovation happening. So let's look at a couple other data points. Looking at 2017 through Q1, we've seen 11.27 billion across 705 deals, and this sort of breakdown between the top categories is normally what we see on an annual basis for the last 3 years. But it's an incredible amount of VC that's flown into the space. over the last 3 years that we've tracked. And when we step back and look at public sources from 2012 up to this point, of course, 2020 there, we're just getting into 2020. But you can see things really took off. In 2015 happened. We thought we'd never see a year like that again. And then through 2018, things have just been on fire. Will we return to that level of investment? That's something that everybody's asking to question. That's the big question on everybody's minds, and that's where I'd like to shift gears into some observations that we've made in talking to investors as well as startups. So while all of this is happening, funds are still being raised and closed globally. So while I sift through all of this data around individual investments into startups, I'm also sifting through data around funds that are being raised. That really hasn't slowed down. Now, what the change is, if you think about what's happening in your business as a tech provider or in your business as an HR person, as a buyer of that technology, and I noticed that we've got some investors on the line, it's, the current condition is wait and see mode, right? Everybody's in a mode where we're modeling our businesses, we're looking at our budgets, we're looking at, it's very difficult to plan beyond the next few months, but trying to get a feel for what that new normal is, or when things will open up. Deals are still being done. I reported last week about a deal that was written about in the New York Times. There's a big story on it, where the deal, basically the vendor post-pandemic went out to raise money and raised $35 million. So it's not that deals aren't being done, it's just that there's a new calculus being used by investors. And of course, the pace is slowing down. And it's not that they don't expect to be investing in this category long term. I would just say that not to confuse these short-term realities that we're looking at today with long-term market shifts. And when I say market shifts, I'm talking about the models for work, the way the technology and work technology will be developed, and where people are innovating, and most importantly, what people will be using, what they need today and in the long term, and what they'll be buying. And now, shifting gears into the trends, the interesting thing about this list, right? If I put it up and just, if you think about this, new work models not yet being supported in HR tech, that's very relevant in the short-term COVID-19 conversation when we talk about, distributed work, remote work, how do we lead and manage in that environment? Conversational HR tech will empower HR, very relevant today. What can we automate? What can we do, more effectively and efficiently, providing a better experience for employees and for candidates in the recruiting mode, with more of a digital interface, and automating as much as we can, and lowering costs and taking our human resources and making them more strategic. Talent mobility, another, looking at the resources we have and how do we reskill them and reassign them. Job boards and marketplaces, how will they shift? But here's the interesting thing about this list. It's the same list I had more details on it, but the same list that we reviewed at the end of Q4. So I really want to, I think it's a very poignant point to stress for anyone that is looking at investment. If you're a founder and you're looking to receive investment, this is still a relevant conversation today. It's the context that we're having it with your buyer and with your investor, in why you are aligning with the trends both today and in the future. If you're an investor, I think it would be short-sighted to look at the way work is evolving and think that, for example, we did 3,000 different data points. It's a very large sample size. the Workforce Intelligence Report, about 50% of employers were offering some level of formal distributed work model, remote work from a shared office, et cetera, last year. That's probably, after this, that will leap ahead, and we've probably accelerated that by 5 or 10 years, the track that we were on. But the trend is the same, right? What it requires from a capability perspective, and if anything, it's calling the HR professionals and leaders to a new level to how we address this. And it's a call to arms for the tech providers for how we really deal with this. When I talk about new work models, I'm not just talking about remote work and distributed work, but also now is the time when freelancers and contractors are going to be leveraged in a recession or in a questionable economy. We see that type of work get leveraged more than ever. So these are the trends that I think are present today. They will shift. And they will change over the next year, and the current situation will certainly have an impact on that. But I would just caution you from reacting too much in the short-term reality in relative to the long-term. So that being said, I promised a 30-minute session with some data-packed insights. I want to call your attention, if you're a tech provider, we're going to get into some data around going to market in the new normal, what we've been seeing in the advisory work with providers, and a little bit of what we're hearing from employers. You can find all of that under the member events at hrwins.com. And of course, you can get access to this data and deal by deal insights as deals happen at hrwins.com. HR Tech Book for the directory of the market, and Future of Work Mag for a good resource for research on work-related news and trends. So that being said, I'm going to I'll respond to questions via email, and I want to keep this at 30 minutes and respect everybody's time. And thank you for attending today.